Okay, you're welcome to you're welcome to this class. In this class, we'll be considering three major important topics. These topics are cardinal to whatever you do in the forex markets. The first is understanding candles. The next is introduction to fundamental analysis. I already mentioned it in our introduction. And then the third is introduction to technical analysis, which I also mentioned during our introductory call. Now, what are candlesticks? What are candlesticks? I will sincerely advise you have a notepad by your side so that you can take as much jotting as possible, and feel free to always drop your question. Now, if you can see this chart here, this chart is actually a 5 minute chart. Now look at the different time frames. You have so many time frames. I highlighted 1 minute, 2 minute, 3 minute, 5 minute, 10 minutes, 15 minutes, 1 hour, 4 hour in one day. So the ones I want to use is what I highlight. And what you'll be using is just 3 minutes, 5 minutes, and 1 minute. That is what you'll be using. So what are candles? Candles are actually instruments in the market that is used to measure price movements from one point to another within a particular period. Candles are instruments in the market that is used to measure price movements from one point to another within a particular period or within a particular time frame. Now, let me explain that definition. Price in the market always move. For instance, if you look at this chart now, this red that you see highlighted here and this thin line you're looking at is where price currently is. And what price is that? Is the price of GBP AUD, that is Great British Pound paired against the Australian dollar. So what it's telling us is currently, if you want to sell the Great Britain pound to get the Australian dollar, you need to have 1.81001 Great Britain pound to get 1 Australian dollar. So that is currently where the market price is. Now, this price, this candle actually is what tells us where price has been in the past, how far it went within a particular time frame. If you can see over here, we have different time frames. So if you want to know, all right, in 5 minutes in the past, I want to see what price was doing. In 10 minutes in the past, different segments of 10 minutes, I want to see what price was doing. Different segments of 15 minutes, I want to see what price was doing in the past. So candles are those things that tells you what price are doing. We don't only have candles, we have many other instruments, but the most popular of them all is Japanese candle. They tell you what price was doing in the past. Now, this is trading view. Understanding that about candles, if you can look at this chart and you're very observant, you see that there are two types of candles here. There are two colors of candles. You can see that there's the green candles, the light green, and you can see that there's the light red candles. Now, what are the differences? Because they have differences, obviously. Now, if you notice something about the green candles, that every time the green candles forms concurrently, it keeps forming concurrently after every 5 minutes, because this is a 5 minute candle. After every 5 minutes, you notice that the movement is upward going forward. So if this formed around, look down here, you see the time down here. This formed 7:30, 7:35, it went up. 7:40, it went up. 7:50, 7:45, it went up. 7:50, it's almost at the same place because it's red. 7:55, it went up. Then when it got to 18:00, that's 6:00, it started coming down because the red candle started forming. So you can just deduce from that and say that the green candles represent upward movement of price. Okay, let me get this. Let me get this up. That's what I want. The green candles represent upward movement of price. What I want is good. The green candle represents upward movement of price. So you want to take note of that. You don't want to forget that. You don't want to forget that. The green candles, they represent upward movement of price, whilst the red candle represents downward movement of price. So whenever a particular currency is buying, what does it mean for a currency to be buying? It means the currency is going up. You will be seeing more of the green candles forming, telling us there's an upward movement, or what we call uptrend in the market. And when you see series of red candles forming, it's telling you that there's a drop in value and you have it coming down or selling. It is whenever the candles are coming down, you say that market is selling or is on a bearish move. Or it is selling. But whenever it is buying, you say it's on a bullish move or it is buying or it's on an uptrend. But when it's coming down, it is selling or it's on a downtrend or it's on a bearish move. Now look at this here, guys. This is what is happening right now. You can see a red candle form, the next red candle came down. You can see now there's a struggle between red and green. If the green forms, it goes up. But watch, when the red tries to form, it goes down. So just to further buttress that whenever you see red candle form, what is telling you that currency is gaining value. And whenever you see green candle forming, it's telling you that currency is gaining value. And whenever you see red candles forming, it's telling you that currency is actually losing value. Now, I told you that the green candle is what we call the bullish candle. It is the bullish candle or the buying candle or the uptrending candle, Now look at this. The more the green candle forms, the more it shoots up. So the bullish candle, the green candle, is the buying candle or the uptrending candle. It is the bullish candle, it is the buying candle, it is the uptrending candle. That is the green candle. While the red candle is the bearish candle, it is the selling candle, and it is the downtrending candle. So you can just see how there's a war here. Now, let me tell you something. Just have this have this at the back of your mind. The market is a place of war between two currencies. These two currencies are fighting to gain value. War between two economies. War between economies. That is the forex market. Any economy that wins stays on top. Any currency that wins stays on top. That is why you can see there's a struggle. This is trying to push up, trying to push down, trying to push up, because there's a battle between Britain and Australia. Their economy is struggling. Britain wants to be on top. Australian dollar wants to be on top. So you must understand that, which is why in the market, when you make the wrong decision, it either hurts you big time. It can hurt you big time. All right, moving forward, getting to learn more about this bullish candle now. Now, if you notice this candle, you will see that there's what we call this part of the candle is what we refer to as the body of the candle. This thick part of the candle. This thick part is what we refer to as, let me isolate one of this candle. This thick part, the thick part, okay, let me write this. The thick part is what we call the body. So the candle has two parts. It has the body, and that body is, this is the body of the candle. Beautiful. And then we have what we call the wick of the candle. Every candle, most candles have wicks. This is the wick. This is another wick. Let me get this. This is yet another wick. So those are wicks. They are candle wicks. Spelled like this. W-I. Just the way our candle has wicks that helps it burn, so also the methods. And I'll tell you their various functions. So the candle has a body. The body is the thicker parts, either red. It applies to both red and to the green. And then the wick is the thinner parts that appears on some, on top and below. On others, you don't see wick on the candle. that means something, and I'll be explaining that soon. So let me get rid of this. All right, now. So what, before you understand what the candle body and the candle wick stands for, you must first of all understand the candle itself. Now, for the bullish candle, which is this green candle, the bullish candle always opens at the bottom. That is, it starts its formation at the bottom and finishes its formation at the top. Why does it start its formation at the bottom and finish at top? Because it is a candle that shows you that the market is going up. And anything that is going up always starts from the under and finishes on top and continues going up. So that is why the bullish candle, or this green candle, has its opening price at the bottom of the candle and then the closing price at the top. Now, the bottom does not necessarily mean where the wick is. The bottom for every candle, please give me a moment. The bottom for every candle is where the tick part began. So the bottom for all this green candle is where the tick part actually began. That's the bottom. And the top is where the tick part stopped. Where the tick part stopped. That is what you refer to as the top of the candle. Now, this candle, you can observe, it has tail. What is this tail telling me? Now, you can see that there's a tail that came down and there's a tail that went up. Now, this candle, remember I told you it opens at the bottom. So this is where it's opened. It's opened here at the bottom, at this point here. And then what it's telling me is that this candle, first of all, went down like it was going to sell, like it was losing value. What it means is sellers were more in the market at this particular period. Then what then happened? I remember I told you that this market is a battleground. War is a place of war. Now what happened is buyers, people that want the Great Britain pound to remain strong, came into the market and pushed the price from this lowest point it got to and pushed it up as high as this point. So what happens is where price opens, it opened here for the bullish candle, it opened here, came down here. As far as it does not remain below the opening price, if it goes above the opening price, everything that happens from the opening price below will show as wick. It will be captured as a wick. What that wick is telling you is, please note, price actually got this far, but it could not maintain that ground. What it's telling you is it actually claimed this ground, but could not maintain it. So the sellers came, pushed it from this point down, but the sellers could not hold price. They could not continue pushing it down. They could not continue making GBP lose value. So then GBP gained strength and pushed up to this point, but could not continue maintaining that strength. Then it was weak and it pulled back down and closed here. So this is where it closed. So this is the opening price. This is the closing price. Now this is the bottom. This is the bottom, the lowest it got to, and this was the highest it got to. The lowest it got to does not necessarily mean it got there and stayed there. It's telling you that this is how far it got, but could not maintain it, and it went back up. Same for the red. Now, same for this. This opened here, pushed down to this point, but could not hold this ground. Buyers came, pushed it up, and that is why it is a green candle, because the green candle always forms upward. So it opens at this point and went up. Now, it is not in all cases that you see it pushing down. Look at this case now. It opened here. It never pushed down. That is why you are not seeing a wick under. It just opened here and continued going up. Went up. This is how far it went, but could not hold that ground. It now pushed down a little bit. You see that? Look at this one again. This green candle here. It also didn't go down. It just opened and continued going up. Came this far, but could not hold, and it's retraced back, pushed down. Look at another. Look at this one. Opened here, didn't go down, just went up, went this high, but could not hold it, closed here. But there are some candles that you see that up and down, there's even no wick. Let me look for an example of one. Those are the ones that maintain the grounds that they claim. That is, it opened and got to the highest it could and didn't push down because it could not be pushed down. Sellers were not in the market to push it down. So it maintained its price. All right, look at an example here. Look at this. Look at this one. Look at this. It's open here, pushed up, although there's a tiny wick there, but then nobody could push it down. It's closed at the top. Look at another example. Look at this one. There's no wick. So it's telling you that where it opened, the lowest it got to was where it opened, and the highest it got to was where it closed. Nobody could push it down. Nobody could push it up. So that is for the bullish candle. If you don't understand, watch this video again. Now, for the bearish candle is the opposite of the bullish candle. What is the bearish candle? Remember, I told you the bearish candle is the selling candle. It tells us when the market is losing value and when it is going down. Excuse me. So when something is going down, it tells you it starts from the top and it goes down. So therefore, the bearish candle opens at the top and closes at the bottom. Now, it opened at this point, pushed up, but could not maintain that, was pushed down, and it closed here. So everything I've explained for the bullish candle should be applied in the opposite for the bearish candle or the red candle. Now, like I said, you will not be able to understand all these things all at once. The more you come into the market, the more you see me do things, the more we keep talking about this, they begin to make sense gradually. So don't feel lost, don't feel disappointed, don't feel, this thing is becoming headache. Don't feel like that. Give yourself time. I told you it takes 6 months minimum for someone to be able to understand Forex. So give yourself time, commit yourself to these things, and you are going to gradually see how the progress is coming. That was how it happened for me. In my first 4 months, these things were just still confusing for me. They were still confusing. And that is how it's going to be. So the bearish candle opens on top and closes at the bottom. That is that for the bearish candle. So I've discussed 2 types of candle. The bullish candle, which tells us market is going up, and the bearish candle, which tells us the market is coming down. Now, that is that for the candles. As we progress, we are going to still talk more on candles. The second thing we have to discuss is fundamental analysis. Fundamental analysis. Now, what is fundamental analysis? If you are very, very attentive, you would have heard me mention, I think, in our first class or in our second class, that there are 2 types of analysis. There are 2 types of analysis. There's the fundamental and there's the technical analysis. There's the technical analysis. There's the technical analysis. So we have 2 types. This is 1 and this is 2. Fundamental and technical. Fundamental and technical. Now let me get rid of this. Now, what is fundamental analysis? I told you guys that fundamental analysis is an analysis that comprises of analyzing the economy of a particular nation to know the strength of its currency and the role the currency will play in the global foreign exchange markets. It is analyzing the economy of a particular nation to know the role the currency of that nation will play in the global economic foreign exchange market. So when you analyze the economy of a particular nation and the economy is strong, you will know that, okay, from their economy being strong, I can infer and say that their currency is going to be strong in the global economic foreign exchange market. And when a currency is strong, what do? People tend to buy anything that is strong, anything that is gaining value. Now, when I say strong, what I mean is it is gaining value. It is valuable. So when the economy of a nation is strong, the currency is going to be strong. And then what you do is you look for opportunities to buy that currency. Now, like I told you, there are ways currencies are arranged in the forex markets. You don't mix it. Then there's a particular system for arrangement. So let's say, for instance, where we are at now, this currency we are looking at, GBP AUD. Let's say you analyze the Australian economy and you realize that the Australian economy is going strong. What it means is the Australian dollar will be strong. Now, when you see the Australian dollar paired against the GBP like this, what does it tell you? It tells you that the quote currency, which is the second currency, is strong, and the base currency, which is the first currency, is not as strong as it. So when the second currency is stronger than the first currency, remember what I told you, the second currency will pull the first currency down. It will go down. Why? Because the second is stronger than the first. When the second is stronger than the first, it goes down. Those currency pair go down. What it means is the first currency pair is losing value in the market. So GBP is going to be losing value in respect to AUD. So it's going to be selling. But if reverse were the case, if you analyze these two economies and you realize that the British economy is way stronger than the Australian economy, you know that the British pound in the market will be stronger than the Australian pound. So what will happen? The British pound will push the Australian pound up. The British pound will be going up and it will be carrying the Australian pound up. And what it means is GBP will be buying. So what you'll be doing in such is you'll be looking for opportunities to buy. So whenever the base currency or the first currency is stronger than the second, you buy. But when the second is stronger than the first, you sell. And like I told you, you don't need to sit before CNN, Al Jazeera, BBC on all these platforms to know what is happening in the economy, or you don't need to be googling every month what is the strength of Australian economy today. No, there are tools that helps us know these things. There are tools that helps make fundamental analysis easy. One of those tools is this site I have open, Fxcritique Calendar. Fxcritique Calendar. Now, what is the job Fxcritique Calendar does for us? Fxcritique Calendar is a daily calendar that tells us currencies that have news. Currencies that have news. Now, there's a rule in the Forex market. Don't trade any currency that is on the news because you don't know what the outcome of the news is. If the outcome of the news is good, it might push the currency up, and if the outcome of the currency is bad, it might push the currency down. So that is one of the first places we go for fundamental analysis to know which currency to trade. Any currency on the news, we don't trade it. We want to wait and see what the outcome of the news is so that you will know what decision to take. Now, let me open it. As you can see now, you see, it has dates, it has time, it has the currency pair, it has the impact of the news, it has a few summarized details of the news, and it has the result of the news. Now, look at this, guys. Okay, I'm actually doing this video. You can see my time, 2 a.m. And this is Tuesday, November. So today, Tuesday, November, what news? Okay, JPY, that is the Japanese yen, has news all day. So they already told us that it has news all day. Why? It's because there's a bank holiday in Japan. There's a bank holiday in Japan. So JPY has news all day. So you want to be very careful. What it means is JPY might be weak and JPY might be strong. Now, you see, by 4:30 a.m. today, Nigerian time, there's going to be news on which pair? AUD. And the news is telling you red. Red means danger. Stay away. Don't even think about it. So around 4:30, if I want to trade from 4 o'clock to 5 o'clock, 30 minutes before the news and 30 minutes after the news, I don't want to do anything with any currency on the news, especially when there's red. So I don't want to do anything with AUD from 4 o'clock to 5 o'clock. No matter how good I'm looking at it, I don't want to do anything with it. Why? Because there's a news on it. And the news is not just an ordinary news. It is a red folder news. What this red folder means is high impact. It is a high impact news. Jot it down. Red folder means high impact news. And here you have the result. Here you have what the formal result is. Here you have the prediction. And after the news happened, you will now have what actually occurred. Now, if the result is higher than this, it means Australian dollar is going to be strong. But if the result is lower than 0.25%, it means that Australian dollar will be weak. Now, you move. By 8:30, there's a news on CHF. CHF stands for Switzerland franc. So by 8:30, I want to stay away from CHF. Although it is a yellow folder news, what yellow folder stands for is low impact news. If you can see, there are three colors here. There's the orange folder, there's the yellow folder, and there's the red folder. Yellow folder stands for low impact news. Orange folder stands for medium impact news, and red folder stands for high impact news. All these news are news. Don't trade when there's a news on any currency. So before you come to trade, this is the fundamental analysis. Before you come to trade, you must check your news to know which currency not to trade, and to know which to trade. Any currency that is on the news around the time, 30 minutes to the time you are trading and 30 minutes after the time you are trading, any currency on the news, stay away from it. Apart after you've done this, now you want to do this every time you want to trade, so it makes it easy for you. The next thing to do is, now you want to also know what is the strength of currencies. There's what we call the currency strength meter, livechat.co.uk. This is the website, livechat.co. It's a currency strength meter. What it does is, you don't need to be going to all these countries to know what is happening in their economy. There is an organization that have taken the responsibility upon themselves to supply this information free of charge, telling us what is happening with every currency. So here you have the meter, you have it calibrated in baht. You have euro, you have GBP, you have USD, you have AUD, you have JPY, you have CHF, you have NZD, you have CAD, you have, this is Norwegian kroner, and this is DKK Dakar, but you don't trade any of these two. Now, from this, the more the bar, the stronger the currency. The less the bar, the weaker the currency. So you can see, and the highest bar is 6 bar. So obviously from here, you see that the euro is strong, telling you that the European euro is strong. So anything that you pair with the euro, it will buy. That means you need, what you'll be looking for is an opportunity to buy the euro. That is what you'll be looking for right now. GBP is going to buy. USD is strong, but though not as strong as this, but still it will buy. AUD is strong, but not as strong as the rest. JPY is weak. CHF is weak. NZ is weak. CAD is medium. So this is where you know the strength. So now let me give an example. Euro JPY. If you have a currency, Euro JPY, a currency Euro JPY. Euro is the first currency. JPY is the second currency. What will happen? What will you do in such case? You'll be looking for what opportunity? Euro is the base and Euro is strong. JPY is weak. What opportunity will you be looking for in such a market? I will be looking for an opportunity to do what? To buy. Why will I be looking for an opportunity to buy? Because Euro, the base currency, the first currency, is stronger than JPY, which is the second currency. So what it means is people will be buying Euro and they'll be giving away JPY because JPY is weak. People always stick to currencies with value. So I will buy Euro JPY. That is what I will do. Now, let me give you another pair. Let's say there's nothing like I'm going to send how these currencies are arranged to you so that you can learn it and understand how they are arranged. Okay, let's say AUD USD. That is how it is arranged. AUD USD. Obviously, USD is stronger than AUD. But AUD is the first currency and USD is the second currency. And I told you, anytime the second currency is stronger than the first, the market is going to go which direction? It's going to go down because the second currency in this time is stronger than the first. So in AUD USD, I'll be looking for an opportunity to sell because USD, which is the second currency, is stronger than AUD, which is the first currency. You understand that? So, two things you want to do before you trade. Two important things about fundamental analysis. I want to first of all check the news, and then I want to check my currency strength. Now, this currency strength is updated every 5 minutes. So every 5 minutes, you want to come here and refresh. Now, look at this. I just refreshed this right before your eyes. Look at GBP. GBP is now the strongest. AUD is 5. GBP is 6 bars. GBP is, Euro is 5. GBP is 6 bars. Look at AUD. AUD has even dropped the more. Look at NZD. NZD has gained strength. CAD has dropped. So you want to constantly refresh it so that you don't take the wrong decision. Now, if you're gaining value, you're understanding what I'm showing you, you're enjoying it, beautiful. So we're back here. So right now, I'm going to give you an assignment. You submit the assignment to me. I will stop here, then continue from technical analysis. Let me see if you understand what I just taught you on a little bit of fundamental analysis. Number one question is, give me 3 characteristics. 3 characteristics. I'm just writing it in a short form. 3 characteristics, 3 features, 3 unique features or unique characters of a bullish candle. Let me use bullish. Of a bullish candle each. 3 characteristics each of a bullish candle and bearish candle. So 3 characteristics of a bullish candle. What are the characteristics? What do you know about a bearish candle, a bullish candle? A bullish candle is this. A bullish candle opens here and closes here. A bullish candle shows this direction of movement. A bearish candle is this. A bearish candle opens here and closes here. A bearish candle shows this direction of movement. So I'm giving you an expo to make things easy for you. So you want to tell me 3 characteristics each of these candles. Number two assignment. Now let me just tell you the assignment. Let me dictate it. If after checking your currency strengths, now let me draw this chart. S stands for strong and W stands for weak. After checking your currency strength, where S stands for strong and W stands for weak, CAD, CAD is strong, and CAD is strong. Euro is strong. I'm going to give you Euro is strong. Let me see. Here, USD is weak. GBP is weak. Here, JPY is strong. And here, AUD is weak. Good. AUD is weak. Now, if after checking your person, S stands for strong and W stands for weak, CAD is strong, Euro is strong, and JPY is strong, USD is weak, GBP is weak, and AUD is weak. Now, tell me what direction will the following go? 1, what direction will the following currency move? That is, if you were to trade it, what direction will you trade it in? Will you buy it or will you sell it? Remember, when you are buying it, it means the direction is upward. And when you are selling it, it means the direction is downward. Now you want to tell me the direction the following mixture I'm going to be putting here, the following combination I'm going to be putting here. You are going to tell me the direction is going to go to based on what I just showed you, strong and weak. Remember what I told you. When the base is strong, there's a direction it goes to. And when the quote is strong, there's a direction the currency goes to. Remember, the base is the first one and the quote is the second one. So you want to tell me what direction will USD JPY, what direction will it go to? When I say direction, I mean, what will you do? Will you buy or will you sell? So you want to tell me the direction. Okay, it will go up, therefore I will buy. It will go down, therefore I will sell. And you tell me why do you think it will go up? It will go up because the base is stronger than the quote, or because the quote is stronger than. Just what I've been teaching you. I want to see if you've been following. Number 2. Euro AUD. Number 3. Let me check if my record is here. Yes, my record is here. Euro AUD. Number 3. AUD card. This is how they are combined. So from even what I'm doing, you can begin to just take notes of these ones and write it. Number 4. Now let me tempt you guys. Euro. Let me test you guys. Euro JPY. Let me test you guys. Euro JPY. This is Euro JPY. Let me test you guys. Number 5. Number 5 is going to be USD card. USD, let me write it here. USD card. CAD. So this is USD card. USD card. So number 5. Number 1, USD JPY. Number 2, Euro AUD. Number 3, AUD card. Number 4, Euro JPY. And number 5, USD card. So you want to tell me the direction these currencies are going to be going based on these ones on the right being strong and this one on the left being weak. Assuming this is your currency strength. This is fundamental analysis now. So you are going to tell me the direction they are going to be going to. You are going to tell me what you'll be doing. Will you be buying or you'll be selling? And you'll be telling me why you'll be buying and why you'll be selling. So do your assignment. Let me see how well you are following. And then we'll move to the next topic, which is going to be introduction to technical analysis. Watch this video as many times as possible in case you don't understand. Take care. I remain my humble self, Paul Femi Samuel.